Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Monday, April 15th, 2019, and this is the Daily Report for gold and silver. We did have a continuation, although mild continuation, of the selling pressure that really began on Thursday of last week, with all of the precious metals trading slightly lower and palladium actually having a pretty large drawdown in terms of percentage gains. We had equities markets kind of flat today, and we actually had the dollar down a little bit. So what that tells us is that it was selling pressure that took pricing lower. Although the market did close off of the lows, I do have to report that our stop was hit. I am sad to say that the market ran into our territory, which was sitting at 1287.13, and in fact closed up a couple of dollars just off of it. Let's take a look at our current pricing. First of all, gold. This is basis the most active June contract, down $4.40 at $1290.80. The low today, $1285.30. That's where our stop got hit. Silver also lower on the day, but only down about 2 cents, trading at $1494.50. Platinum and palladium did get hit the hardest, a 0.75% drop in platinum futures, back below 900, down 650 at 892, and palladium, as I said, taking the largest percentage drawdown, losing 1.1% on the day, a drawdown of $14.70 at $1335.50. So traders, as I said at the beginning of the report, I am sorry to have to report to you that we were stopped out. Our stops on our long trade at 87.13. We got long at 1301 and change. So we did sustain a drawdown on this particular trade. When we take a look at the activity today, what we can say is as follows. First, I have a long trend line that starts at the bottom that occurred back in November when the market was trading just below $1,200 and extended that forward using the most recent low prior to this low, which occurs right here, as our guideline or our secondary low to make our angle. We can say that when the market sold off on Thursday, although it sold off, I had believed that there could be some tentative support that would come in at this 0.38% retracement, which comes in around 1291. And on Friday, that assumption was supported by this small doji candle that had a very, very narrow range in terms of the open and close and the high and the low of the day. It did seem as though the market wanted to recover. However, that was an incorrect assumption because we had this market drop and drop fairly hard intraday. It actually occurred in overseas trading last night, in which we saw the low come in at around 1285. Now, based on that, the one thing that I am seeing is that we did in fact close just above the 100-day moving average, but nonetheless, the low today, even with the close and the fact that it is below the 1291.60, that 0.38% retracement, does tell me that we could see a little bit more selling pressure. However, my sense is that we should have seen some support in the market. Now, what we want to do is to see if we're going to stabilize or find more selling pressure come in over the week. Because the one thing that is a certainty in terms of technical evidence is when we take a look at the most recent low, which is right here, and we draw our line pretty much straight across, what we can see is that these lows are almost equal, with this most current low being maybe just a tick or so above this prior low, meaning this low here. But nonetheless, we're certainly in treacherous waters right now in which we could see further selling pressure. If we do get a further decline, my level of support would not come in till about 1277, and that is the 0.38% retracement from our much longer data set. And traders, we are looking at a daily chart of silver, and silver, as I've pointed out, is one of the markets that I'm least bullish upon. Fact of the matter is, it is the only market within the complex, the precious metals complex, to actually break below its 200-day moving average on Thursday of last week. All of the other markets, even though they sustained pretty big drawdowns, we're able to trade above this critical long-term indicator because a break below a 200-day moving average says that on a long-term basis, we are looking at a bearish market tendency. That's at least what we're seeing in silver for right now. In terms of percentage drawdowns, the largest was definitely palladium today. Palladium lost about $15, over a percent, 1335.50. But the interesting thing is when we look at current pricing and compare it to the averages, what we can see is that at least on a tentative basis, palladium is still maintaining a price point above its 100-day moving average, whereas gold closed slightly below it. This has been Gary Wagner, wishing you as always good trading. I'm sorry I was unable to deliver that to you today. We'll talk to you tomorrow for the next daily update and review. Bye-bye.